This was the most important earnings week this quarter. We had big tech like Google, Amazon, Microsoft, and Apple reporting, so a lot of volatility was expected. We also had a good portion of my holdings reporting as well, so we're going to take a look into that. For those who are new to the channel, my name is Dividend Dashboard. I like to make transparent, straight to the point content where I give a weekly update on my dividend portfolio. If you like to follow my journey, make sure to subscribe and also like the video. It helps the channel a lot. Alright, so looking into big tech, all companies reported some sort of a slowdown in their services except for Apple. Amazon went straight into the deep red after missing the estimates. Even though they were not a huge miss, it looks like investors are expecting more of this company. Google is in the red too. Most of its business is focused on ads, and as we are heading into economic hardship, advertisers tend to pull out their ads or pay less. So this greatly affects Google in the short term. Microsoft, on the other hand, surpassed expectations top and bottom lines, but cloud revenue was lower than expected. Same with the guidance, so the price of the stock tumbled a bit. Netflix did good. They reported the previous week and they had an increase in subscribers. This is the first gain after the geopolitical situation, bringing a light of hope to investors. Now, Meta. They're just investing too much money and currently losing on the metaverse, while having advertisers reducing ads. This greatly affects the revenue of the company, sending the stock price down 22%. So this was an earnings week with a lot of mixed expectations, but regardless of that, investors seem to be looking into a bright future. The market went up 3.7% during the week, and I share the same sentiments with investors. Short-term news can greatly affect a business value, but over the long term, the resilience of the management and improvement of fundamentals is what will make the investments grow. As mentioned before, beside big tech reporting earnings, some of my holdings reported as well, so let's go over them. We have Coca-Cola reporting a double beat plus increasing guidance. Even with recession fears, this company can control the price of its products while selling affordable beverages that people consume. It's that simple. Then we have Corning, inline EPS with a revenue beat and no guidance provided. This is one of my tech companies in my portfolio. No guidance was provided, but I see as a bear case. Inflation, recession, and research and development could hit revenues in the future, but we will see. Then we have Kimberly-Clark. It's one of my slow growth defensive companies in my portfolio, reporting a miss on EPS and a beat on revenue with an inline guidance. This could be a bear case to some, but I see it as KMB battling inflation and remaining constant while things settle down. Waste Management, a company that I consider super defensive in my portfolio. Double beat with no guidance provided. Nothing much to say about this amazing company. They do pretty well in any economic environment. Same goes to Archer Midlands, ADM. A double beat with no guidance. Being honest, no guidance is needed. This company can adjust its commodity prices to inflation and continue its stream of revenue to increase. Then we have 3M. 3M beat in EPS, missed on revenue, and lowered their guidance. 3M is going through some tough situations with a lot of uncertainty. The lawsuit could dwindle the earnings of the company for several quarters, and as of now, I'm waiting for a clear path to invest here. Stag Industrial. This is a REIT focused on warehouses. Double beat, no guidance provided. And last, Apple. Double beat with no guidance provided, even after having lower than expected sales in some of their services. Also, Apple announced that their iPhone production will be reduced, but this does not have an alarming impact on the revenue of the company moving forward. So with the market going up this week, it also means that my portfolio went up as well. Portfolio value sitting at $8,622.28 with a dividend yield of 3.26%. This portfolio is generating $286.39 in yearly dividends. I'm still at 19 holdings. Looking at the performance, I added the S&P 500 for comparison. In the 1 week and 1 month, my portfolio is up 5 and 9%, while it's still down in the 3 months and year to date, down 1.63% and 2.63%. Compared to the S&P, I'm beating the benchmark so far this year. This is because my portfolio is very defensive. Most of my holdings are in the consumer staples, and this brings less downside than the market. Looking at the portfolio allocation, we have increased small positions, like Kroger and ADM. As those positions grow, it is more clear to see them in the pie chart, unlike Nike that is sitting between Apple and J&J. Annual dividend per holding. AT&T still at the top by a huge amount. We have other positions slowly catching up. Shout out to Stag that is moving towards the $20 per year. Sector allocation, consumer defenses remains big at 25%, and as mentioned, it is the sector that is keeping my portfolio with low volatility. Buys of the week. I added a bit of waste management and Kroger to increase the allocation and defensiveness of the portfolio, besides both being a great deal. I added Colgate, K&B, and AT&T to dollar cost average and further increased the annual dividend. Last but not least, the total return. Most of my companies went straight into the green this week. We'll keep an eye on Corning, Colgate, and Starbucks. Starbucks is having earnings this upcoming Thursday, so it'll be interesting to see what they report. Thank you for watching, and I'll see you on the next one.